Welcome back to BitcoinDorks. Today, we're diving into the recent price action of Bitcoin and discussing whether the bull run has paused following the recent crash to $57,000, or if it's just a healthy correction. So, let's jump right in. The cryptocurrency market has been on a wild ride lately, with Bitcoin experiencing significant volatility in recent weeks. After reaching new all-time highs above $65,000, Bitcoin saw a sharp correction, plummeting to around $57,000 in a matter of days. This price action has left many investors wondering whether the bull run has come to a halt or if it's just a temporary setback in Bitcoin's upward trajectory. So, what exactly caused the sudden downturn in Bitcoin's price, and what does it mean for the future of the market? Well, there are several factors at play here. First and foremost is the recent crackdown on cryptocurrency mining in China, which has led to a significant drop in Bitcoin's hash rate and raised concerns about the network's security and stability. There has been growing speculation about potential regulatory crackdowns on the cryptocurrency market, particularly in the United States. Fears of increased regulation and scrutiny from government agencies have contributed to investor uncertainty and market volatility, prompting some traders to take profits and adopt a more cautious approach. However, despite the recent downturn, many analysts remain optimistic about Bitcoin's long-term prospects. They argue that the recent correction is a healthy and necessary part of the market cycle, providing an opportunity for investors to accumulate Bitcoin at lower prices before the next leg up. One key metric that analysts are closely monitoring amidst the recent market turbulence is Bitcoin's on-chain data. This comprehensive dataset provides invaluable insights into the underlying fundamentals of the Bitcoin network and offers a nuanced understanding of investor behavior and market sentiment. In times of heightened volatility and uncertainty, such as the recent price drop experienced by Bitcoin, on-chain data serves as a beacon of clarity amidst the storm. By analyzing various on-chain metrics, analysts can gain a deeper understanding of the network's health, vitality, and resilience. Despite the short-term fluctuations in price, Bitcoin's transaction volume has remained relatively stable, suggesting sustained interest and engagement among users. This resilience in transaction volume underscores the enduring demand for Bitcoin as a medium of exchange and store of value, reaffirming its status as the leading cryptocurrency in the market. Another key on-chain metric that analysts closely monitor is the behavior of long-term hodlers. These are individuals or entities that have held onto their Bitcoin for an extended period, often with a long-term investment horizon in mind. By analyzing the accumulation patterns of long-term hodlers, analysts can gauge investor confidence and sentiment towards Bitcoin. At the heart of Bitcoin's on-chain data analysis is the examination of various metrics such as transaction volume, wallet activity, and hodler behavior. These metrics help analysts gauge the level of activity and engagement within the Bitcoin network and provide clues about the overall health and vitality of the ecosystem. Despite the recent price correction, Bitcoin's on-chain metrics remain robust, with healthy levels of activity observed across multiple fronts. Transaction volume, for instance, has remained relatively stable, indicating sustained interest and engagement among users. This suggests that despite short-term market fluctuations, the underlying demand for Bitcoin remains strong, with users actively transacting and exchanging the digital asset. Another encouraging sign that bolsters confidence in Bitcoin's resilience is the sustained accumulation of the digital asset by long-term hodlers. These are individuals or entities that have demonstrated a strong conviction in Bitcoin's value proposition and have held onto their coins for an extended period, often with a long-term investment horizon in mind. Despite the recent price volatility and market turbulence, long-term hodlers have remained steadfast in their commitment to Bitcoin, viewing short-term fluctuations as noise in the broader narrative of Bitcoin's long-term potential. Instead of succumbing to fear and panic selling during periods of market weakness, these hodlers have capitalized on the opportunity to accumulate additional coins at discounted prices, thereby strengthening their positions and reinforcing their belief in Bitcoin's value as a store of wealth and hedge against inflation. The accumulation of Bitcoin by long-term hodlers also serves as a form of decentralization within the ecosystem. Unlike short-term traders who may be more susceptible to market sentiment and speculative trends, long-term hodlers are often motivated by a commitment to Bitcoin's principles and a desire to participate in its long-term success. By accumulating and holding onto their coins, these hodlers help to distribute ownership of Bitcoin more evenly across the network, thereby strengthening its decentralization and resilience to external pressures. This accumulation behavior is indicative of strong conviction in Bitcoin's value proposition and long-term potential as a store of value and hedge against inflation. It reflects a belief among investors that Bitcoin represents a sound investment opportunity with the potential for significant long-term appreciation. Bitcoin's on-chain data also provides insights into the distribution of coins across various entities and addresses. By analyzing the distribution of Bitcoin holdings, analysts can gain a better understanding of market dynamics and investor behavior. For instance, a concentration of Bitcoin holdings among a small number of addresses may indicate potential centralization or manipulation, whereas a more evenly distributed ownership pattern suggests a healthier and more decentralized ecosystem. Overall, Bitcoin's on-chain data remains a valuable tool for investors and analysts seeking to gain insights into the underlying fundamentals of the network. Despite the recent price drop, the strength of Bitcoin's on-chain metrics suggests that the network remains robust and resilient. With strong support from long-term hodlers and continued interest from users and investors alike. In conclusion, while short-term price fluctuations may cause uncertainty and anxiety among investors, Bitcoin's on-chain data offers a reassuring glimpse into the network's underlying strength and resilience. By closely monitoring key metrics and analyzing hodler behavior, investors can gain valuable insights into market sentiment and make informed decisions about their investment strategies. That's all for today's video.